Good morning. This is Josh Hayes with Hedge Plus, and here is the market monitor for Tuesday, July 8th. Unfortunate day yesterday, something we saw coming, something we were anticipating on Thursday when we decided to make the sale we did with soybeans. We felt like the market was being driven by speculators in anticipation of a major trade deal announcement in Iowa Thursday night from President Trump. It reached a point where speculation was really centering on a deal with China, and we knew at that point that not knowing what the announcement was going to be, that if the market was trading on the potential of a major trade deal announcement with China, there really wasn't anything bigger than that. So our thought on Thursday when we made the sale recommendation that we did with soybeans to close out old crop sales was based upon the risk of, if that speech and that announcement was a letdown, what we'd see would be exactly what occurred. All that speculative money would exit the market when the market reopened on Sunday night, and it would be gone before we could even make a sale yesterday. So that's why we pulled the trigger. That turns out to be exactly what happened. There was no trade announcement of any significance, nothing mentioned about China. Trump did repeat what he had said the day before about there being a deal with Vietnam, which is when that short rally began. And really, what this boils down to is it shows the potential of what could happen. And obviously, that rally came for a reason, knowing that if we get major significant trade deals done, it's going to help our markets. But we also saw the downside of, teasing announcements or getting deals that are announced that don't have any specifics to ag. Some of these deals are being announced on the anticipation that, well, they've got an agreement on what the permanent tariff rates going forward will be, and then we'll figure out more specifics later. That's not going to help the markets. The markets are going to need specific commitments as part of these deals. They still have a reason to believe that those will come at some point, but it's definitely not in time for old crop, which is why we're happy to have sold out. But it's also going to be seemingly quite a bit scattered. And these timelines and these deadlines keep getting moved around. It's really become impossible to plan. We wanted to hold back on sales as long as we could because we know the potential is there with trade deals and what it can do for the market. But we couldn't basically deal with the uncertainty anymore. Time was running out. So now we've reached a point where we have to anticipate that short of anything major in the world happening, we're going to see somewhat of a repeat of last year. We're getting in the point of the year where the risk is being reduced dramatically with the U.S. crop as we get into pollination. We know there's a massive crop coming from South America. These two massive regions and two massive United States and South American crops are going to come to the market in a relatively short period of time, close together, one after the other, and without some kind of major disruption in the world, we have to anticipate that the world is going to be flush with grains and prices are going to stay low for a while, and any adjustments could potentially take all the way until January for any kind of weather issues that we have had to appear. Right now, we've got corn rated at the highest it's been since 2016. We've got trade doubts and fears with two of our largest buyers in Japan and South Korea. And so we're happy to have old crop sales done because there's just not a whole lot of positive things to point to as an opportunity for the markets to rally right now. The trade deals are simply taking too long for old crop. And even to come, even though we think there will be definite positives to come for new crop, we just think it's going to be quite a bit scattered because even as these deals are announced, many specifics are set to be worked out later. Taking a look at the weather, basically timely rain and seasonal temps, everything east of the Rockies. There's obviously the flooding that took place in Texas, but that is affected very little agricultural area. Definitely a tragedy, but not something that is impacting our grain markets. In France, dryness is lingering, stressing the crops there. In Brazil, they're drying out, and it's helping them to accelerate their harvest. A harvest that is quite a bit behind, but definitely picking up pace now. And in Canada, they're still dealing with drought, and the prairies are dry. All that being said, there's just not really a major weather issue in a large enough area to have much impact on the markets right now. Taking a look at overnight prices, prices continue to drift downward. Um, Again, with the lack of clarity on trade deals and no weather concerns, this is just pretty much giving back the little mini rally we had, yeah, ahead of the rumors that started to come out about big trade deals with China and whatnot. There's definitely potential to have those mini rallies again, but overall, we are definitely in a continuing drift downward. Taking a comparison of these prices right now to where we were Thursday morning, corn down about 22 cents, soybeans down 35 cents, and wheat down about 18. That's all for today. We will have Patrick's commodity compass out today along with his ASV, and we'll have the grain gauntlet tomorrow. Hope everyone has a great day.